Well, we have a very wild start to the day. A little bit well, not tons of Tesla news, but the news is pretty good this morning for Tesla. And later in the show, I've got some news about housing, some news about mortgages, some news about groceries. Anyway, I think you're going to find those super interesting, and they're not going to be reported anywhere else. You're only going to see it here. Tesla is flirting with break even this morning, or at least it was until just a few minutes ago, and now it's leaping upward. Apparently, people are starting to read the good news that I'm going to report to you in a second. Very volatile. It was up and down like crazy. We'll see how all that turns out later in the day. Barron's, first of all, is reporting that Tesla is up 6 out of 10 times in December. So there you go. You have a theoretically, if you believe history is any guide in this regard, I'm not sure that this kind of reporting is useful at all. What a stock does or what the stock market does in December in previous years, yeah, you might be able to get something out of it, but explain to me what. Help, let me know in the comments below why a previous historical average up or down for a individual stock in an individual month might be predictive of what's going to happen this time. All right. So, like I said, the news is favorable to Tesla as far as I can tell. The headlines, however, are mostly about Michael Burry. We'll get back to him in a minute. Sawyer Merritt says this. This is maybe the best news of the day. It's very, very strong news. Tesla's China-made EV sales rose 9.9% in November compared to last November, equaling 86,700 vehicles, which is the second most best month of the year. The sales of the Model 3 and Model Y made at Giga Shanghai, including exports to Europe and other markets, were up 41% from October. So we saw, what we considered, I talked about as being a little bit soft sales in October. Brian Wang wanted to convince us, said over and over again, look, don't worry about that 1 month. That's what, they're on ships and they're going different places. Anyway, but 86,700 is excellent. I'm going to guess that in November we will see a higher number. I think we'll be looking at 91, 92, maybe 95,000. So overall, that will give China the kind of numbers that will help the overall number maybe get to that 500,000 we've been talking about, because they've been running that second shift now in Berlin for 3 months now, and we've got sales in California, sales in the United States, no evidence, not a single bit of evidence that sales here are not doing well, because have you seen any specials? Have you seen any deals? Have you seen anybody talking about promotions? No. So even if sales are not quite what I'm expecting, maybe we only come in at 450 or 470 or 480. Maybe those are the numbers, but it looks like the margins are going to be great because China's sold out. So they're not lowering the prices in China. And we're not hearing about any kind of deals anywhere else either. So margins might make up some of that difference. Barron says this morning, in summary, catastrophic captures real pain points in LG's China-made packs, premature multi-cell failures hobbling repairs and range. But it's not a full-blown scandal. Tesla's overall battery. So in other words, what's happening here is there's headlines yesterday that there was catastrophic failures of batteries in Teslas in China, but it's not a full-blown scandal. According to Barron's, Tesla's overall battery tech shines in durability metrics, yet supply chain tweaks highlighted the risk of rapid scaling in China. For owners, check your pack type. You can find out in your Tesla app. Warranties cover defects up to 8 years and 160,000 kilometers. If you're eyeing a Tesla, prioritize Panasonic-equipped U.S. models for peace of mind. Okay, from Tip Ranks and Electric this morning, and both of those companies love to skewer Tesla any way they can. They're just pushing this whole thing about the catastrophic failures. But it turns out it's LG China-made packs and in China. So just, you have to watch this stuff carefully. So this is what Grok says is, look, it's only about China is only a few And it's also from years ago. Now, I never quote Squawk Square because I never know when he's kidding and when he's not. I never know when he's pumping and when he's not. Anyway, this morning he says that big short investor Michael Burry revives his short bet against Tesla, calling the stock ridiculously overvalued. So my prediction of Burry being short is confirmed. All the downside was Burry working hard to short because he was shorting Tesla. Now it makes sense. So in other words, what we've got is the typical reason why you don't want, why Elon Musk says the shorts should be stopped. He's basically talking down the stock. He's got a reputation. He knows he's going to get headlines. So he shorts the stock and then he comes in and talks a bunch of crap, hoping to get the folks to, move the stock in the direction that he's now betting. This is practically, I would say it's fraudulent behavior, quite frankly. This is Randy Kirk, by the way. I want to just remind you to buy the book as a gift for Christmas for everybody you love. And if you don't want to buy that, then you want to buy a Cybertruck bottle opener for everybody you love. And then you want to hit like and subscribe and notify. Please hit the subscribe button. The subscription numbers have gone just completely down. And so if you like the show, if you want to be reminded, hit subscribe and notify. I mean, it's there you go. All right. Sam Altman just hit code. This comes from Mario Knopfel. Sam Altman just hit code red and big tech finally smells blood. OpenAI just threw the emergency lever. Sam Altman, the man. Now, by the way, if you've been paying attention, we've only mentioned it a little bit on this show, but if you've been watching some of the other shows, some of the other podcasts, like the All In podcast and elsewhere, there's this narrative that's growing that OpenAI is going to be the big loser in this competition between the various hyperscalers. And so this article says that Sam Altman, the man who spent the last 2 years looking untouchable, told his staff this week that the AI crown is no longer guaranteed. Yeah, because he's falling behind Google and Grok. Not with Google firing off Gemini 3 like a warning shot, and Anthropic quietly building models that keep beating GPT-5 and the metrics that actually matter. Doesn't even mention, of course, xAI, which is also winning in a whole bunch of the metrics. So Altman did the unthinkable. He froze the future to save the present. Advertising tools paused. AI shopping agents delayed. Health automation ambitions back on the shelf. Pulse, the AI morning briefing app, see you later. The message to his $500 billion rocket ship was blunt. All hands on ChatGPT. Speed, stability, personalization, fix it, or somebody else will. Well, one of the things you might want to do is you might want to make it honest. You might want to make it not dishonest. As Elon says, you might want to emphasize truth. That would be a good starting point. I've seen a couple of examples the last few days of stuff that was just, again, way too woke. Well, anyway, not me. This is not me personally. I'm saying on X, I've seen people reporting. Anyway, why now? Because Google's running its new models on custom silicon like it's got cheat codes. Anthropic's Opus line keeps dropping bigger numbers. Grok hits benchmarks like it's on speed, and the cost of staying at the frontier is now measured in entire data centers. So you've got xAI opening data centers like crazy. The TPUs over at Google becoming the big story. And they say, so what's the vibe like at OpenAI? Somewhere between moonshot fab and trench warfare. They're fighting competitors, GPU shortages, rising compute bills, and the constant fear that your best researchers are one recruiter away from crossing over to the other side. Meanwhile, the numbers don't lie. OpenAI dominates the market. 800 million weekly users is absurd, but people are spending more time inside Google's Gemini ecosystems, and they're moving faster and faster over to Grok. That doesn't say, but it's implied earlier. ChatGPT currently eats about 10% of global search traffic. Google considers that an existential insult. There's a phase where trench lines hardened. It's about momentum, and momentum just shifted. Altman knows it. If OpenAI loses the attention war now, even by a few percentage points, the downstream effects will hit everything. Developer loyalty, partnerships, capital flow, and eventually the one metric CEOs fear more than anything, they will lose the narrative. And I think that's what's happening. They're losing the narrative. Grok, Google, Anthropic, to a certain extent, they're the ones that are at the front of the narrative pack right now. By the way, that was mostly from the financial. I think when you read Naufel's columns, they always seem like they're Grok, written by Grok. You can kind of tell the style, a little bit, cool and I think some of the writing is good, but some of it is like you just recognize it anyway. So I'm wondering whether he took the Financial Times article and then had Grok kind of summarize it, but he says it's from the Financial Times. He does give them credit. All right, what about I did some checking with Grok last night because I was looking at all of these. You're probably seeing them over on X. The issue about the medical, what's going to happen to the medical if the government doesn't step in? What's going to happen if we get to the end of the month and the Trump administration says, well, we haven't been able to agree with anything with the Democrats on the ACA, which is a ridiculous name, of course. So let's call it what it is. let's call it the Obamacare because it's not affordable. So if you are low income in the United States, there's not going to be any change at all because you're either paying zero or you're paying a couple of bucks. And it's, at the very, very most, it might go up $35 a month, which that's a lot of money to somebody that's in low income, which low income, by the way, is 100 to 250% of the federal, whatever it's called, poverty line, the federal poverty line. Now, what about middle income? These are people that are making 250 to 400% of the federal poverty line. Well, the payments there could triple up from 4% to 8.5% of income. I wouldn't like that. If my payments went from 4% of my income, let's say that's a $60,000 family income. Let's say $100,000 family income. All right, that's kind of an average right now. 4% of that would be $4,000 a year. 8.5 would be $8,000 a year. It should be going up like 300 or so dollars a month. That would be a big hit. Now? Remember, though, that's partially because they weren't paying it for the last couple of years based on a special subsidy. Now, what if you're above 400%? This is, starting to talk about folks that make some serious money. There's only 1.6 million of these people in that category. They lose all the subsidies, and they're facing a 20 to 25% hike. So a 55-year-old in West Virginia would pay $800 a month more. Now, see, that's only a $150 a month. So it seems like the middle income people are getting hit worse than these upper income. And then older income people, of course, if they're on Social Security and Medicare, they're paying no extra. Okay, now how about 50-year mortgages? Everybody's, oh, Trump, what are you talking about? 50-year mortgage? How horrible. What are you doing to the kids? You're going to be paying the bank your whole life. Well, I'm not a big fan generally of the idea, but let me just tell you three things that you might not be thinking about. Back in the 50s, where some of you were actually alive and paying attention, there were no such things as 30-year mortgages. There was 20-year mortgages, 15-year mortgages, 10-year, but there was no 30-year mortgages. Now, we went from 20 years as kind of the standard to 30 years as the standard. That was a 50% increase in the term, right? 20 to 30, easy to do. 50% increase. Now, Trump has suggested we do approximately the same increase in term from 30 to 50 years. Maybe he's right directionally and he should have said 40 or 45 years. That 40 years would be less than the increase from 20 to 30, and 45 would be exactly, and 50 years is just slightly more. So Crimea River, this is not a crazy idea. This is just what we've already gone through 30 years ago, 40, 50 years ago. We've already increased to 30 years. So should we go back to 20 as the standard? Well, part two, nobody, zip zero, okay, a few people pay off their 30-year loan. It just doesn't happen. The people like me that are sitting, and you maybe, that are sitting on 2.75% or 3% loans, sure, we might pay off our 30-year loan if we live long enough. The home refinance business is huge because folks get into adjustable rate loans or they get into high interest loans. And then after a few years, they've built up some equity, they've increased their income, and they just go refinance if the rates come down. This is what's been happening for the last 20 years at least. Well, then what about if lending rates do get back down to 3%? Why would anyone not want a 100-year loan? I mean, seriously, some people pay off their 2.5 or their 3% loans. I'm going, really? I mean, you must have just tons of money sitting around because you can take your 3%, the money that you have from that 100-year loan, you can put it into the S&P, and in 99 years out of 100, you would be up. At three, we're talking about the S&P average. I forget, what is it now, 12% per year? So you could borrow at 3? This is the best carry trade ever. This makes the Japanese carry trade look like, not that great. Well, anyway, that's my thinking. Those are the three things that I think about the 50-year loan. I don't think it's crazy. I don't think it's ridiculous. I think that it shows that Trump is thinking outside the box and trying to come up with solutions. And yeah, sure, anybody that thinks outside the box is going to get slammed all the time. You got to get used to that. CNBC this morning says, are you ready? Now, this is the housing news I have for you this morning. The national median rent for apartments fell. No. Now we're not saying it went up less. No. Fell in absolute terms, 1% in November from October. Now stands at $1,367, according to the apartment list. It was the fourth consecutive month-over-month decline. Apartment rents are now down 1.1% from November 2024 and 5.2% from their 2022 peak. Oh, really? Earlier this year, it appeared that annual growth was on track to flip positive for the first time since mid-2023. However, that rebound stalled out and reversed course during a particularly slow summer, according to the apartment list researchers. After hitting a record high for this index way back in 2017, the national multifamily vacancy rate remained at 7.2% in November. So this is a high number, 7.2%. This is not good for the apartment folks. The historic surge in multifamily construction over the past few years is now pulling back because there's a great supply of new units still coming online at a time when there's weaker demand. The fall historically sees the biggest slowdown in multifamily rents, but this year it's even more pronounced. CoStar reports that the biggest monthly drops in median rent it has seen in 15 years is how they're tracking it right now. The primary reason is more young people are struggling to form new households. Is it? Is that the reason? No, if they're struggling to farm, well, yes, that would keep more people in the single level where they're just one person per unit. No, that would keep demand up. No, this is the reverse. That's wrong. But here's my take. I can tell you exactly why rents are down. Maybe you'll let me know in the comments below that you knew before I said it. Or did you? If you don't add 3 million people to the population like we've been doing the last 4 years, 3 million a year to the population as a result of southern border crossings, and you sent 2.3 million people home in 2025 alone, that is $5.3 million, $5.3 million people difference. Divide that by, let's say, a family of 5. I mean, it's probably not 5. It's probably closer to 3.5 or 4 based on Grok research that I did earlier this year. But let's divide by 5. That's 1 million housing units that you don't need. That's definitely going to subtract from demand by a lot. Also, as rents come down, so do housing prices. people on the margin that are currently renting, they're always trying to decide, is it smarter to keep renting or is it smarter to now buy? Well, if the rents come down, then that keeps you like, no, why am I going to take my $1,300 a month rent and go into a $1,800 a month purchase on a mortgage? So this concept, okay, is not only underreported, it's not reported at all. You tell me where you've seen it anywhere else. The immigration situation is dragging rents down, and it's also one of the reasons why housing prices have been coming down, not just staying even, coming down nationally. We've had an increase in housing prices in November, according to Redfin, and I've been saying I expect some firming next spring. But as I look at these trends, and if the Trump administration continues to be as successful at returning immigrants back to their home countries and not allowing more immigrants in, both from the southern border, but also from visas and whatnot, where they're reducing the number of students and other things because they're trying to be more selective in who we're allowing into the country. I'm not as sure that we'll get those increases in housing prices in the spring. It might be flat, might be slightly up or slightly down, but I don't think we're going to see big increases in housing prices in the spring. What else might be impacted by all this demographic stuff? Well, maybe food prices would be coming down. Oh, yeah, they are. Well, they're not actually going negative yet, but food pricing right now, according to Truflation, is only going up at a rate of 0.5%. Now, if that continues for month after month, I'm calling it April, by the time that people start really getting serious about thinking about the fall, Trump's going to be getting credit for the fact that food pricing is flat or maybe even down by then. And housing up 1%, according to Truflation. Also, Truflation says that overnight it was up a little bit, 2.51. Goods up a little bit, also back above 2% at 2.12. Core is up 2.25, which is solid and good. Services now is becoming an issue. It's up 2.83, according to Truflation. Again, that's going to be mostly labor-based. So if people are getting raises and people are having to pay more to get really solid people, that's what we're hearing over and over and over again. You know, this whole business about not having any jobs out there. No, what we don't have is the right jobs. We have tons and tons of people that have graduated with degrees in, Hispanic studies or something, and they should be getting degrees in plumbing or electrical contracting or entrepreneurship, or, there's just a whole bunch of other categories where if they were getting jobs in those areas, they would get hired immediately. As you know, it was Ford recently said they have 500,000 jobs at 120,000 average that are going just not happening right. Just they can't find anybody to fill them. Okay, so over in all of that, what has happened to the market this morning? Well, Tesla continues to be like this. I mean, super volatile, and the rest of the market is not being that volatile. But right now, Tesla is down 0.14. The range now has been all the way from a low of 427 to a high of 436.80. So there you go. It's all over the place. Right now, it's just slightly down. You got the Dow, which is slightly up 0.12, NASDAQ up a little better, 0.58, and the S&P up 0.21. You've got the VIX falling this morning, back at under 17 again. So we do have a risk on market at this point. And you got the Magnificent Seven, other than Tesla, all up. But yeah, it's a little volatile in all cases, and some of those are getting very close to going back into the negative territory again. And NVIDIA right now continues to be a strong, but it's at 183. So from 178 just a week ago to 183 now. All right, what about the Cathie Woods? Those are all up except for �伊𝐞𝐬𝐝𝐸𝐿𝐴. Everything else is up. And but again, there's this up, and then it's kind of now trending down. So we'll see how all this works out throughout the day. Bond market, I looked earlier, it was, oh, good. The 1%, the 1 basis point gain that was happening at the beginning of the day is now way down, only at 0.2%. So we're back under 4.1 at 4.098. This is good news. And then oil, just almost flat at I'm sorry, at 9 cents down, 59.23. Natural gas down also 0.26, but still almost $5. By the way, a little bit more research on natural gas. Okay, so first of all, natural gas does not impact utilities nearly as much as electricity. I mean, it's not even close. In fact, if you look at the overall utility bills that people pay, if you look at the electric utility bill that they pay and the overall, they like match each other. Natural gas fluctuates a ton more, but it's a smaller percentage of the overall utility bill. And the utilities, what do you call it? The utilities are buying it up when it's cheap, putting it in the ground and or getting futures contracts so that they can keep these wild swings from happening. I used to do it when I bought plastics. I would buy when the price was cheap. You could even, play the market if you wanted to make sure that you were balancing all of these things. All right. So we've got, so those are two reasons why maybe it's not going to have as much impact as I thought. So we'll see what happens. But right now, I'm less concerned about that. So the president seems to be 100% correct in attacking the medical bills and the medical insurance. That's where he, I think, can do the most good right now. All right, we've got a Bitcoin. I'm sorry, the dollar is down a little bit this morning against the major currencies. You've got Bitcoin up 4,845. So it bounced really, really big time off of 84 again. We're back over 90,000, 90,221. Ethereum bounced even more, back up to 2,970. That's up 7.84 this morning. How come you didn't buy yesterday, huh? You missed that one. Okay, so that's where things are right now. The major headline on CNBC this morning is rents down. Well, some of this stuff it's going to start to filter through to the population. If CNBC is talking about it, other people are going to talk about it also. And the folks are going to start going, wait a minute, Trump promised to bring down prices, and the prices are coming down. What do you know? It might turn out better than some are thinking. This is, what else? Oh, yeah, I got to let you know that later on today, we'll have a fairly early show with Mr. Gibbs. Nicholas will be on. I'm imagining I'll probably put that out about 3:20 today, just right after the pre-market comes out. And then we'll have a part 2 of Brian White, which is always funny, and I can tell you this one will be extremely informative. I'll put that up at around 7 o'clock California time. Yesterday night, did you watch Brian last night? How about Larry? Well, Larry got really good numbers and Brian got okay numbers, and Brian's was very informative. So I'll put both cards up so you can choose, if you got some time, which one to go back and check out. Remember, these are back up to 25. You missed your chance. You could have bought them for 20 bucks yesterday. 25 bucks for one, 45 for two. You want to get it down to 20 bucks, you got to get to 5. At 5, it's 100 bucks. All right. So there you go. You can get your $20 deal, but now you have to buy 5 to do it. Now, by the way, it's only $22.50 if you buy 2. So anyway, there you are. Buy them up. Information down below. And of course, you want to buy the book for yourself. What are you waiting for? $3.99. You have to read the whole book. Go in, look at the table of contents, look at the people that you like, or look at the topics that you like. For $3.98, you don't think one chapter in the book is going to be worth it? And they're like 15, 20-minute reads each chapter, So pick the chapters that are interesting to you and throw the rest of it away for $3.98. You could also join Patreon. Nobody joins Patreon anymore because I never say it. I never ask you to, and I never suggest it. Give me a Christmas present this year. Join Patreon. Okay, wait a minute. I want to go because it's so volatile this morning. It could be up 17 by now. Let's go back and look and see what's happening in Tesla. Yep, see, back above the green, back into the green, up 0.08%. We are at 430 and 47 cents. On that lovely and encouraging note, I will say adieu. It's been nice talking to you.